Here's something I think y'all don't understand about the set and forget strategy. We all know that in Alex's course he teaches if we have weekly and daily in sync, we don't need the 4-hour to also be in sync with these time frames. For example, oh yeah, and this is a W for weekly time frame, D for daily time frame, and 4-hour, 1 hour. For example, weekly time frame bearish, daily bearish, 4-hour bullish. 4-hour is not in sync with these time frames. If it was, it would be bearish. Very simple to understand. And if you're wondering why price looks different on all the time frames, that's because the 1 hour moves way more than the 4-hour does, and the 4-hour moves way more than the daily moves way more than the weekly does. So in cases like these where we have the weekly time frame bearish and the daily bearish and the 4-hour bullish, Alex tells us to just wait for a shift of structure on the lower time frames and then enter our sells. And we also know that whenever 4-hour creates a pullback, the lower time frames shift structure to create that pullback. For example, this is the 4-hour. Let's call this move right here a pullback because it's called a pullback, and let's call this move up an arm, or the 4-hour arm, just to make the explanation simple. Okay, so in this 4-hour arm there is structure, there is market structure in here. On the 4-hour, most of the time it just looks like a line like this right here. But if we go down to the lower time frames, we understand that the lower time frames shifted bullish and are creating higher highs and higher lows to create this 4-hour arm, and then they shift bearish to create the 4-hour pullback. And when they shift bullish, this lets us know that the 4-hour pullback might be done, and this is where we are told to enter. Very simple. And when we are bearish, when 4-hour is bearish, the lower time frames create lower lows and lower highs to create the 4-hour arm, and then we shift bullish to create the 4-hour pullback. And then when we shift bearish, this lets us know that the pullback might be done. This is where we enter. Very, very simple. And do y'all know how a bullish and a bearish market moves? A bullish market moves in higher highs and higher lows, higher highs, higher low, higher high. And a bearish market moves in lower lows, lower highs, lower low, lower high, lower low. In all these pullbacks, what I just explained, that's what happens in there. In all these, let's pretend this is the 4-hour. These lines I drew represents the 4-hour price. Okay, in all these pullbacks on the 4-hour, we go down. If we go down to the lower time frames, we see that the 1 hour goes bearish to create the pullback, and when we shift the bullish, that's when the 4-hour most of the time then goes up to create the new high. Happens in this pullback, happens in this pullback, happens at whatever other pullback is going to be created. And when we are bearish, we look at this pullback, we go down to the lower time frames. Like I said, just pretend this is on the 4-hour. We go down to the lower time frames. We see that the lower time frames went bearish to create this move, and then went bullish to create this 4-hour pullback. And when we shift bearish again, this is where 4-hour tends to then have the move to the downside to create the new lower low. Happens in this pullback, happens in this pullback, happens at whatever pullback comes after that. Okay, so here is the problem. Like I said, a bullish market moves in higher highs and higher lows. Alex tells us to enter when we see the shift of structure on the lower time frames. Okay, let's say we have our shift of structure right here. 1 hour shifts bearish. Let me grab this right here. Now this becomes the lower high, lower low. We are bearish, we enter. And then from here you will see something like this. From here we will continue creating lower lows and lower highs, and then we do something like this. How would this look on the 4-hour? On the 4-hour, it will look something like this. Actually, let me use a different color. So, god damn. Let's use green. red. Yeah, let's use red. On the 4 hour, it looks something like this. Like I told you before, on the 4 hour, it just looks like a line because the 1 hour moves way more than the 4 hour does. So on the 4 hour, it just looks like a line. This right here is this on the 1 hour. So you enter your trade, you see green for a little bit, and then the lower time frames, the 1 hour shift bullish, and then something like this happens. And on the 4 hour, this will look something like this. Okay, so what just happened? What just happened is that you entered when 4 hour went to create its pullback to then create the new higher high, because a bullish market moves in higher highs and higher lows, higher highs and higher lows. So this is the problem right here with entering, because the 4 hour is not in sync with the other time frames. But sometimes this is not what always happens. Sometimes the lower time frames just continue creating lower lows and lower highs until it hits your take profit. And in cases like this, the 4 hour then continue moving down and then it shifts bearish. This is the best thing that could happen for you if you did take the trade right here, because the 4 hour will then do something like this, maybe continue down for a little bit and then create a pullback. In this pullback, the lower time frames go bullish to create the pullback on the 4 hour, and then 4 hour continues creating lower lows and lower highs from there. Very, very simple. And sometimes the lower time frames do shift bullish, and then they just shift bearish again and then continue creating lower lows and lower highs until it hits your take profit. So why am I telling you all of this? This is just for you to watch out. Sometimes y'all lose trades like this and y'all don't understand why. Just know the next time you enter a trade like this, when 4 hour is not in sync with the other time frames, just know when you see the shift of structure, the shift of structure might be happening just to create the 4 hour pullback, and then shift the bullish to create the new 4 hour higher high. Now let's look at an example on the chart of what I was talking about. And by the way, by lower time frames, I mean from the 2 hour to the 15-minute. AUD CAD weekly time frame were bearish. Daily time frame is also bearish. 4 hour is bullish. Just fits the example perfectly. This is the higher high on the 4 hour, and this is the higher low. But right now it looks like we're bearish because this kind of candle is under the higher low. But if we look to the left, this candle still has 1 hour and 17 minutes until it closes. For all we know, by the time this candle closes, it might look like this, or a doji, or some huge candle to the downside. We can't say for sure. This is why you never want to base anything off of a still open candle. If we look at the candle before it, at some point it was also under the higher low. This line right here, this wick, means that this candle reached down here under the higher low. It looked like we had shifted bearish, and then we retraced, closed, and then closed as a doji above the higher low on the 4 hour, and 4 hour was still bullish when this candle closed. And for the sake of the example, let's just say 4 hour is bullish. Okay, like I told you, now this is the 4 hour arm, and this is the 4 hour pullback. On the 4 hour, as you can see, the arm just looks like a line, but we go down to the lower time frame, we understand that a whole lot of stuff had to happen to create that 4 hour arm. Now let me just put this right here. We go down to the 1 hour. This was the lower high on the 1 hour, and this down here was the lower low. Everything that happened inside these two lines, was all market structure until we close above the line, or the lower high, shifting bullish on the 1 hour. Why did 1 hour shift bullish? 1 hour shifted bullish to create the 4 hour arm, and from here we just continue creating high highs and higher lows. Now we are at the area of interest. This is where Alex tells us to wait for the shift of structure and then enter. Okay, this, I should have just used that line again. Okay, this is the higher high on the 1 hour, and this is the higher low on the 1 hour, or was the higher low on the 1 hour. And then Alex tells us to wait for the shift of structure for this to close under the higher low, and then we did close under, shifting bearish on the 1 hour. This is where we enter, take the trade, stop loss, place it whatever, and take profit, place it whatever. And we go back to the 4 hour. Like I told you in my example, to create the 4 hour pullback, the lower time frames shift bearish, and to create the 4 hour arm, the lower time frames shift bullish, creates higher highs and higher lows. We go up to the 4 hour to see if we're looking, if this right here, when 1 hour shifted bearish, was actually in the 4 hour pullback. As you can see, the bubble and all the lines I drew. Did I draw any lines? Let me go draw a line. So yeah, I know that we're actually looking at the 4 hour pullback. And as you can see, the line I just drew, it's exactly inside the 4 hour pullback. The simplest way to think about this is that all we did was just zoom in into this 4 hour pullback. By going down to the lower time frame, we are zooming in. Okay, we go back to the 1 hour. 1 hour shifted bearish to create the 4 hour pullback. And as you can see right now, what I said hasn't exactly happened. 1 hour is still creating lower. Why does so much stuff happens whenever I'm like explaining stuff? As you can see, 1 hour is still creating lower lows and lower highs. We haven't exactly shifted bullish to then create the higher high. Could still happen. We still have like 1 hour until that one candle I was talking about closes, which would determine whether we would do it or not. Okay, 1 hour is still bearish. So this is not a perfect example, but if the whole example were to play out, it will look something like this. 1 hour goes up, shifts bullish, and then from here we then just continue creating higher highs and higher lows. We go back to the 4 hour. As you can see, when 1 hour goes up like that, we create a new higher high on the 4 hour. Like I told you before, this is the higher high on the 4 hour, and this down here is the higher low. We get up here, this right here then becomes the higher high, and this down here then becomes the higher low. So let me look for an example that actually does what I was talking about. This is not a perfect example yet. Could still play out since the candles are still open, but we can't wait for 1 hour and 12 minutes to see if it will actually happen. Yeah, perfect example right here, just perfect, but not exactly to the T. It did not exactly, 4 hour did not exactly go up and then create a new high high. It failed to create the new high high, but still serves the purpose. Okay, 4 hour arm, we go down to the lower time frame. We understand that the 1 hour or the lower time frame shifted bullish to create it. We already know this, very easy stuff. 1 hour goes bullish to create the 4 hour arm. We get to the area of interest, and then 1 hour, we wait for the 1 hour shift of structure. The shift of structure on the 1 hour happens. Perfect. This is where Alex tells us to enter. And by the way, I have no idea if the weekly or the daily were bearish and 4 hour was, I guess I can only say it for 4 hour. 4 hour is, or 4 hour was, but where's the 4 hour was bullish right here, but I can't say if the daily or the weekly were bearish right here. So for the purpose of the example, let's just say daily and weekly time frame were bearish when this happened. It probably were. Yeah, they were. As you can see, this is the lower high on the daily time frame, and this down here is the lower low. And weekly time frame also bearish, lower high, and this is the lower low. And then it happened right here where I put the bubble. So it's just perfect. And 4 hour right here was bullish. Perfect example. Okay, we saw that the 1 hour went bullish to create the 4 hour arm. Now let's look at the 4 hour pullback. but it's annoying the way I gotta like look for these bubbles. Okay, the 1 hour then shifted bearish. This was the higher high, higher low, and then it closed under the higher low, shifting bearish. Why did 1 hour shift bearish? 1 hour shifted bearish to create the 4 hour pullback. And let me just delete one of these bubbles so you understand that this right here is happening exactly in the 4 hour pullback. Just trying to delete some of the doubts. As you can see, the line I drew, it's happening exactly inside that 4 hour pullback. We go back to the 1 hour. Okay, this right here at the shift of structure on the 1 hour, this is where Alex tells us to enter. 1 hour shifts bearish, you enter, stop loss, whatever, and then take profit, whatever. You see green for a little bit. Price is going down. You don't realize that it's just going down to create that 4 hour pullback. You just chilling. You like, oh man, this is definitely bound to hit take profit. And then something like this happens. Boom. This was the lower high. Oh, what did I tell you? Why so many things pop up whenever I'm explaining things? This was the lower high on the 1 hour, and this down here was the lower low. And then boom, we close above the lower high, shifting bullish on the 1 hour. And then from here, price just continue going up, creating high highs and higher lows. And then boom, came back, took you out. Let me drag this to the left, wicked you out in this case. But as you can see, that's exactly my whole point right here. This is what I'm talking about. Now waiting for the 4 hour to be in sync with the other time frames is actually, I guess, might make you lose money. You just gotta watch out for this. This is the whole point of this lesson. You just gotta know this, watch out for it, learn to adapt whenever you see something like this. I feel like I've only been talking about the problem. Now let's talk about the solutions. And by the way, if you think these videos look unprofessional, just try to ignore all the little things I do. I don't really like plan these videos. I just think of the idea and just like going from there. There's like 1% involved in planning. Just try to focus on the knowledge you're supposed to be gaining from this, which is all that like really matters. Let's just look at the solutions. First solution, well known by set and forget traders, everybody should know this. You just wait for the 4 hour to be in sync with the other time frames, with the daily and weekly. You wait for it to shift bearish in our case, since most of the time frames were bearish, the weekly and the daily. Okay, let me just copy this move right here. 4 hour bullish, higher high, higher low. You just wait for this to do something like this, close under the previous structure point or the higher low, shifting bearish, and then you wait for a pullback. What did I say happens inside this 4 hour arm when we are bearish? Leave your answer in the comments. Pause the video if you need more time, and I'm gonna give you the answer since you took too long. 1 hour goes bearish to create this 4 hour arm, and then we shift the bullish to create the 4 hour pullback. And when we shift the bearish again, that's when we enter. Okay, another solution. Or first, let me explain how is this different from the problem. How is this different? First, now we have the weekly bearish and the daily bearish, and now the 4 hour bearish. Most of the time frames, actually all the time frames, are going down, which means the price will most likely go down. The more time frames you have in sync, or the more time frames you have going in a certain direction, the more likely price will go in that certain direction. If you have most of the time frames bullish, most likely price will go up. If we have most of the time frames going down, bearish, price will most likely go down. Very easy to understand, very, very simple. Okay, that's the first solution. And now second solution, same but different. It's like the same as the first. Let me copy this move again. Why did I delete it? Okay, from here, instead of waiting for 4 hour to do this, you wait for 4 hour to create a pullback, and then a higher high, and then you wait for this to close under the higher low, shifting bearish. As you can see, it's basically the same as the first, just that I should put it out there for, some people. Not everybody's the same or understands stuff the same. Okay, same thing. 1 hour goes bearish in here, and then it goes bullish to create the pullback, and then it goes bearish to confirm or to show us that the pullback might be done pulling back, and you should enter right here. Very easy. Now, third solution, I have no idea if the other setting for gay traders do this, and I also have no idea if Alex started in the course. Maybe he did, maybe he didn't, maybe I didn't pay attention and I missed it. I have no idea. But I sometimes do this. I wait for the 4 hour to create a double top like this, and then I just look for my sales at the second structure point right here. Most of the time, the lower time frames shift bullish to create this move up, and then when they shift to bearish, this is where I enter. And I only do this if the second structure point did not close above the first. If this closes above, I am no longer interested in sales, and if it's under, I am still interested in sales. I think I saw a perfect, oh, actually I should tell you why this is different from the, how is entering at this second structure point better or different than entering at the first structure point? Good question, buddy. Good question. Okay, this is different because what this tells me is buyers came in, tried pushing price up, failed to create the new 4 hour higher high, and then we shifted bearish again on the 1 hour, the lower time frames, showing us that they actually failed, and then price just goes back down. Very simple. And as you can see or notice, it's the same thing that happened right here. Let's just go back down to the lower time frames and see it at the second structure point. 4 hour created a double top, went up, pulled back, went up again. As you can see, we did not close above the higher high on the 4 hour. On the 4 hour, creating a new higher high, we just remained under. Price failed to create the new higher high. We go down to the lower time frame. Most of the time, the lower time frames shift bullish right here, just like the 1 hour did right here, to create the second structure point, and then I just wait for a shift of structure like this, and then I enter my sales. Very simple, very easy. If you found this useful, please like, subscribe, and turn on the notification bell. Leave a comment. You can ask any question about the strategy, and I might actually make a video on it, or just answer it in the comments if I can. And just to prove, let's go back to the chart. Let me see if I can find another example of the double top stuff I was talking about on the 4 hour. Example, perfect example right here. Price went up to kind of create a double top, and then it went down. And another example. This stuff just happens everywhere. Just trying to prove that it did not only happen right here, because I feel like I've used this example right here way too many times. And then another example right here. Price went up, went down. We can go down to the lower time frame and check it out. Let's go down to the 30-minute this time. Okay, as you can see, 30-minute kind of had the pullback, went up, and then we shifted bearish. When we shifted bearish, price went down. Very easy. Happens all the time. And now, peace.